Here is an example of a perfect breakout with 3 legs. If you capture this, you're gonna make a fortune. But how and when would this happen? Let's have a look. A lot of times, this will happen on an event date. When the result is released, you can see the fluctuation of the market, and in this case, you can see the direction is very good. But it's not necessary that each event date you will see such a breakout, and it has to meet some setups. For this type of strong breakout, basically, before the breakout, you should see a range or consolidation. This range is relatively small and it's very slow. You can see the market with the bars. Each bar is overlapping the other and each bar is very small relatively. And then it's been there for a while, let's say a few hours. And then when the breakout happens, then it could be very strong. The second thing is that you should see a strong breakout with consecutive either bull bars or bear bars, and then the breakout leg, the first leg, should be bigger than the range, much bigger than the range. So in this example, you can see that there are 2 consecutive bull bars here. This bull bar, even though the body is in the middle of the bar, however, with the second bar, this is a trend bar because the body accounts for over 60% of the whole candlestick. These 2 bars together forming the first leg, comparing to the whole range here, you can see it's like more than twice of the range. That's why this leg is very strong with the breakout. The third thing you should notice is for the pullback. You can see that here we have a pullback. This pullback with the 2 consecutive bear bars. Take a look at the second bear bar here. This bear bar is a hammer and with a big tail at the bottom. And then this dotted line is the previous day's high. It's testing the previous day's high but reverse sharply with this big tail. That means the support. And take a look at the next bar, this bull bar. This bull bar has a small tail at the bottom, but it didn't even touch the previous day's high again. That means the strength of the upside pressure. This will also confirms a strong uptrend. And then as expected, we have the second leg up here. Take a look at the second leg up. How many bull bars we have? 1, 2, 3, 4, 5, 6. 6 consecutive bull bars, which means the strength of the market. And then take a look at the distance of this bar. It's larger than the first leg. So this means the strength of the market to the upside, and then there's a higher probability that the market will go for a third leg. After the second leg finishes, take a look at the pullback. The pullback is very shallow. This also confirms a higher probability of the third leg. So if you're holding your position, you can trade for the third leg and then make more profit. How do you capture this breakout to make profit? For experienced traders, basically they can enter anywhere by any kind of market orders or limit orders or stop orders. Like for example, when they see this first bull bar here, they can enter upon the close because they are sure that the direction is going up. Or even if in the second leg here, they can use market orders to enter anywhere in between because given this first leg is very strong. But for the beginners, it's better to take the signal bar to be comfortable in trading. After this first leg up, we can see the next bear bar is not a very good signal bar because the body is small and it's a bear bar, it's in the middle. The next bar, even though it is also a bear bar, but it can serve as a good signal bar because the tail is at the bottom, relatively huge, means the support, and the body is very small. And then you can put your order at the top of the candlestick using stop order to enter the market. Even though right now you see the next bull bar didn't trigger your stop order, but in reality there could be some slippage. So you could be in the market already when you see the next bull bar. But that's another topic for the slippage. And then next, we see another bull bar. This bull bar can serve as a very good signal bar because the body is at the top with the tail at the bottom. That means support. You can still put an order at the top of this bull bar and enter the market. After this second leg finishes, and then when you see the pullback and you believe there could be a third leg, so you can trade in the same way. So for the next bear bar here and the next doji bar, they're not very good signal bar. But this bar, the third one, is a good signal bar. It is a bear bar, but it didn't trigger. And then the next bar, not good bar. not good bar, but until here we see a bull bar. This bull bar is very good trend bar because the body accounts over 90% of the whole candlestick, so you can use this as a signal bar to enter the market. This shows how we enter the market, but when do we exit the market and take the profit? So for strong trend, normally it follows the measured move. So let's have a look at the measured move method. Measured move means we base on the first leg distance and then measure the same thing for the second leg and the third leg. But the second leg has a higher probability to meet the measured move. For this example, we measure from the bottom of the first leg to the top of the last bull bar rather than the top of this bear bar. And then this distance is the first leg distance. And then we measure the same thing. We measure at the bottom of the pullback here, and then measure the same distance up, and then the target is just at this level. Take a look at this bull bar. This bull bar has a big tail at the top, and then this top is just above the target level and then pulls back. That means a lot of other traders are using the same measured move technique to take the profit. Can you use the same measured move technique for the third leg? You should be careful about that because the second leg normally has the highest probability. For the third leg, the probability is much lower. So take a look at the third leg here. If you use the same measured move, you can see that the market didn't reach the target here.